Welcome back, beautiful people. It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update. It's not looking good, everybody. It is really not looking good. But hopping into things, if you are a new viewer, new watcher, if you could smash that subscribe button, that would mean so much to me and also keep me motivated to continue making these videos. But with that being said, let's dive into things. So first things first, we are at 896 subscribers. We have 28 videos. I'm currently filming the 29th video, which is also the 27th portfolio update. As you guys can see, I don't have a thumbnail for my most recent video. I'm having some issues with my thumbnail generator that I usually use. Hopefully for this video and that one, I'll be able to create one today. We shall see. But with that being said, let's dive right in. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial investment or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, here's my game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. I have two sources of income. One is remote work income, stable, consistent, reliable. Been working on that for a long time now. And the second one is business income, which does fluctuate up and down depending on the season. I've committed to contributing a minimum of $300 all the way up to $1,000 plus per month into my Robinhood taxable brokerage. And I'm treating this brokerage like a business, aiming for 30% plus high yield. And the way that I'm achieving this is through investing into high yield income ETFs, such as WPAY, HOW, QDTE, XDTE, XPay, BLOX, and etc. And I have a max of 5 positions that I'm committing to, where I'm alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy and approach. You guys can research it if you want. It's been around for quite some time. I'm going to be reinvesting the weekly or monthly dividends, depending on what I'm invested in at the time, either through DRIP or stacking dividends to purchase when the market is down. But DRIP plus always compounding is the portfolio growth strategy. And basically, I'm going to be rinse and repeating this until my account hits $1,000 per month in dividend income. Now, again, disclaimer, none of this is financial advice. This is strictly for entertainment purposes only. Hopping over here, for those of you who don't know, we have my dividend income milestones while I'm growing my small portfolio. Basically, this is just so I can celebrate the small wins leading up to the bigger goal along the way. So far, last month, we were able to achieve both the $100 a month goal and the $200 a month goal. We are currently on track to reach that $300 a month goal and also potentially that fourth goal of $400 a month. But yeah, you can pause this and see all the goals or milestones leading up to the big one. Last but definitely not least, this is my newest strategy. It's still actually being refined and everything, but basically I'm looking to diversify a bit and hold some different positions that are more focused on growth. So this is the breakdown of that. The first 50% allocation will be in my high conviction, high yield ETFs, or as I like to call it, the HCHY ETFs. These are ETFs I believe aren't going anywhere, and this will allow me to continue increasing my share sizes for each position whenever it dips below average cost per share, or there's a dip in the market and there's a buying opportunity. The remaining 50% will be divided up among 3 types of funds: growth ETFs, stable NAV index ETFs, and bonds. Now, you can see these allocations here: 20% into growth ETFs, 20% into stable NAV index ETFs, and 10% into bonds. So like SGov or something equivalent. It's all about having cash reserves. And that's what this 10% allocation is for. This allows me to still use margin without cash funds being used up first because it's sitting in SGov. This also gives me flexibility with paying off margin should my margin buffer reach a high risk percentage. Now, hopping over into Robinhood so you guys can see the portfolio. It's not looking pretty, guys. It's not looking good at all. We are at $5,413.97. So far, pre-market, we are down 1.21%. Our buying power is $2,592.91. My margin buffer is currently sitting at a 51.35% buffer, or $2,768.53. My total margin is $6,147.70. I've used $3,554.79, so my margin has decreased since last video. So yeah, as you can see, there's been some changes. I actually got rid of 2 positions, one being VGT and the other being EGGY. I'm going to be explaining why in a moment, but also you might see that I bought a put for Alti. So far, it's not looking good, but it doesn't expire until the end of this month, so we shall see. It's just an experiment. I'm only using a very small amount of money. I just wanted to get the feel for what options trading is like. But yeah, anyways, I just wanted to be transparent about that. Now, diving into the positions here. So first we have WPAY. It's not looking good for WPAY. Actually, we are down over 3.87%. It's at $51 a share. My market value is currently $4,083.03. I'm down $163.37 or negative 3.85%. My average cost per share is $53.04. I have 80 shares, so I have increased a little bit since the last video, about like 9 shares or so, 10 shares, something like that. My portfolio diversity for this one is 45.52% with a maintenance ratio still of 30%, so that's looking good. And we did get paid our dividends, so I was pretty much right. Because I held 71 shares, I got paid out 56 cents a share. So if we times that by my shares, it equals $40.34. So I'm pretty happy about that. Hopping into HOOW, today is earnings. I think it's around 5 p.m. Eastern time. But yeah, it's not looking pretty either on here. We're getting close to my average cost, but it's at $68.50 a share. My total market value is $2,123.88. I'm up $8.49 or 0.40%. My average cost per share is $68.23. I still have that 31 shares, and my portfolio diversity is 23.68% with a maintenance ratio of 30%. Now, I'm overall pretty bullish that Robinhood is probably going to exceed earnings, so it's going to beat its earnings. However, I have no idea, and we shall see what happens. Hopping into NVDW, it is currently sitting at $48.85 a share. My market value is $1,514.35. We're up $106.06 still, which is also 7.53%. Our average cost is $45.43. We have 31 shares with a portfolio diversity of 16.88% and a maintenance ratio of 30%. Hopping into BLOX, I have increased my position quite a bit. It's currently sitting at $23.35 a share. My market value is $1,167.50. We are down $90.78 or 7%. My average cost is $25.17. We have 50 shares, and my portfolio diversity is 13.02% with a maintenance ratio of 25%. Now, real quick here, I did want to hop into this split view. I'm currently weighing whether I should temporarily exit out of BLOX and just take like a small loss of $90. And the reason why just strictly has to do with the movement that it has done. Now, I'm probably going to be weighing these options today whenever the market opens and just kind of see how things perform. But overall, I'm kind of disappointed. Not only is it below my total return, but if you can see for the day yesterday, BLOX, which usually has performed pretty well, it was down 7.36%. Meanwhile, WPAY has actually held up pretty well. It's only down 3.87% yesterday. So that has me kind of questioning what I should do. And I still really like BLOX. But here's the thing. I got into this position to kind of hold up my portfolio, not drag it down more than some of my higher risk positions, such as WPAY, HOW, NVDW, what have you. I'm still considering and still weighing out the options, but I want to know what you guys think. Should I hold? Should I just keep DCAing down like I have been? I mean, I went from like 20 shares yesterday to I think about 50 now. It doesn't really like make sense to me. Like I would expect WPAY to drop down a lot more than BLOX has so far. Anyways, that's just something I'm weighing out, and I wanted to share that with you guys, just being transparent as usual. But let's talk about EGGY. Why did I sell EGGY and VGT? So I wanted to hop real quick into my dividend sheet. Before I kind of cover the market return and total return, I did want to talk about two things. So I sold VGT and EGGY for one reason and one reason only. I bought the top. It's as simple as that. I bought the top, and I should probably wait for a pullback before I enter as much as I did in these positions. It just made me very uncomfortable, especially with leveraging margin and not fully paying it all off yet, like my original plan was. So I'm still very much interested in re-adding EGGY back to the portfolio. I'm not sure if I will end up adding VGT actually, so I do take my word back on what I said, but I did want to make you all aware. If we go here to the right on the sheet, we can see that it pulled the 52-week high, which is $42.94. Remember that number, $42.94. Now, if we hop over to my sold position section, you can see for EGGY, my average cost was $40.68. I'm not that far off from the 52-week high. That is a dangerous spot to be in. Now, I sold this for a small loss of $32.40. It sucks. It is what it is. I could have held, whatever, but I just didn't feel comfortable because I personally believe that a lot of these positions that I'm in are at all-time highs, and it's due for a correction. More of a correction than we've been experiencing as of yesterday. That's just my mentality right now. And then VGT, I had an average cost of $799.09. I sold it for $780, so I only had a $9.08 loss. But if we hop back into the positions tab, you can see that 52-week high was $806.99. That didn't feel very good or safe there. So yeah, it's kind of high risk because again, we could see some more pullback. But anyways, that's it for me sharing my personal thesis and why I'm making the moves I'm making. I hope that all makes sense. As of the last logging of this data pool, HOW is at 7.58% total return. WPAY is at 0.28% total return. NVDW is at 11.31% total return, and BLOX is negative 6% total return. And then for market return, HOW 0.35%, for WPAY negative 3.05%, for NVDW 8.27%, and for BLOX negative 6%. So this is how much I've gotten paid for each of these positions so far since holding. So I received $153.34 from HOW, $180.15 from WPAY, and $42.91 from NVDW. And for the year, we have earned $410.99 in dividends so far. Now hopping into X, first things first, if you guys aren't following me on X, I would appreciate anyone who decides to follow me. It's at I'm Nomad Investor, just like my YouTube channel. And I like to post updates, for instance, like when I'm selling things. But yeah, thanks for the support. Now, I know a lot of people are wondering, why was the market down? For instance, like Palantir dipped low, even though it beat its earnings and all these things are happening. So this is something that a member in one of the investing communities I'm a part of shared. And I believe this is from Yahoo Finance, by the way. So it says the stock market is down today, November 4, 2025, primarily due to rising concerns over the high valuations of artificial intelligence and technology stocks. A disappointing market reaction to Palantir's latest earnings report, despite the company beating expectations, fueled a sell-off in the technology sector. This was compounded by warnings from CEOs of major Wall Street firms like Morgan Stanley, who cautioned investors about a potential market pullback or correction. Other contributing factors include concerns about the economy, weaker than expected manufacturing data, and a fifth week of a US government shutdown are adding to economic uncertainty. Mixed earnings reports. Besides Palantir, mixed earning reports from other companies have left investors wanting more. Archer Daniels Midland, ADM, also cut its 2025 profit outlook, causing its shares to fall. They said changing interest rate expectations. Comments from Federal Reserve officials have suggested the central bank may not cut interest rates in December, which has unsettled investors. And in last, corporate news. Specific companies are experiencing losses due to various events, such as Atlas Energy Solutions falling after suspending its dividend, and Uber stock slipping despite strong results. So that's what they shared with me. And of course, there's a lot of other factors involved with this, which I'm gonna kind of dive into some posts related to that. Now here's a post on X from Wannabe Fresh. He's actually replying to the following post. It says, and again, another horrible red day. When are we going to have some decent weeks with some green days? It really sucks. What caused it this time? Richie B said, nothing major driving it right now. Sometimes you just have to zoom out and look at the bigger picture. The market's been running all year with very few real cooldowns. Only 3 notable pullbacks: April, August, and October. Meanwhile, Robinhood is up 265% year to date. Palantir is up 170%. QQQ is up 24%, and BTC up 11%. Not every move needs a headline catalyst. Sometimes it's just profit taking, tax harvesting, or portfolio rebalancing as we begin to close the year. I thought this was very interesting, and it was very enlightening for me because, you guys know I started this portfolio back in August. Now, I have not been paying attention to Palantir's year to date, QQQ year to date, and even Robinhood's year to date. I have not. because I didn't really care prior to starting this portfolio, to be honest. Anyways, guys, I think this is really good to keep in mind. If you're experiencing some dramatic changes to your portfolio, this is like a really good reminder, okay? And of course, we have another post by Wanna Be Fresh, aka Richie B. He says, well, I was definitely wrong this time. Like I've said before, I'll always be transparent about both wins and losses. No one, not even Warren Buffett, times the market perfectly. That said, I've got a few thoughts. The last major drawdowns, April, August, and October, all lasted around 1 to 2 weeks before sharp reversals. I'm seeing similar setups in the charts, sentiment, and data now. A lot of attention will be on Hood tomorrow, which he meant today because it's from yesterday. They're projected to beat earnings, but that may already be priced in. This is very true. The real question is how big the beat is and whether future guidance is strong enough to shift market sentiment. If I had to guess, Hood might follow Palantir's pattern, pre-earnings run up, post-earnings pump, then a fade, possibly continuing into Thursday or even Friday. I was hoping to exit HOOY near even, but I'm not liking the setup. There's a chance it recovers tomorrow, but if not, I'll likely sell before close, even at a loss. Overall returns are still positive, and I'd rather have cash on hand going into next week. One more thing to watch, the government shutdown. If it ends soon, that could trigger a relief rally. If not, expect more red. Good luck, fam. And that's another good point to mention. We have officially exceeded the previous longest government shutdown, which is 35 days previously. So we've exceeded that now. And as a result, we have to keep in mind that that is causing some pressure on the markets, on people, especially like with the upcoming Black Friday and the holiday season, people buying gifts and stuff. So also like SNAP is no longer being given out right now. So no food stamps and other provisions for low income families. But yeah, I mean, I just wanted to share that, guys, because it's super important to be mindful of these things, right? And last but not least, let's take a quick look into the markets on Yahoo Finance. Last but definitely not least, I really quickly wanted to hop into how the futures market is looking like. The VIX is up 14.21%. Gold is up 0.37%. The Russell is up 0.11%. But as you can see, futures for S&P 500 is down 0.21%. For the Dow, it's up 0.02%. And for the NASDAQ, it's down 0.39%. It's looking like a mixed bag today. We could possibly see another red day today. I personally think we will, but I'm hoping and low-key praying that we don't. Anyways, guys, I hope you enjoyed today's video. That's it for the portfolio update. Like I said, I sold 2 major positions, unfortunately, and I'm preparing for the worst right now. But it's all good. I'm still going to be holding my main positions, which are WPAY, HOW, and NVDW. But I'm considering selling blocks. So again, I ask, do you guys think I should sell? Do you guys think I should just keep DCing down? Should I just wait and see how things play out? I don't know. Comment down below any suggestions, questions, feedback, or just regular comments. I'd love to hear your thoughts and read them. With that all being said, until next time, guys, peace.